When it comes to the benefits that real estate investing offers, few terms are thrown around more than cash flow and appreciation. While these two aspects are definitely a game changer when it comes to building wealth, they don't actually paint the entire picture of why rental property investing is one of the best ways to grow your money. In this video, I'm going to cover the 4 ways that investing in real estate has made more millionaires than any other industry in the entire world. For number 1, we have cash flow. Cash flow is basically the monthly profits you receive as a result of owning rental property. It's the part that allows people to take back control of their time. With enough cash flow, people actually have the ability to quit their 9 to 5 jobs and do what they want with their time rather than being forced to work a job that they may or may not like in order to keep the bills paid. Whether that looks like traveling, spending time with your family, or maybe just working on something you're passionate about without having that stress of, is this going to bring in enough money to make ends meet? All this really boils down to is the rent minus the expenses. A few examples of expenses you'd have while owning rental properties would be your mortgage payment, property taxes, home insurance, your estimated vacancy losses, and your estimated repair and maintenance costs. When your rents received are greater than all the expenses, that is cash flow. I'll be making a video shortly on how to properly analyze a rental property to help you guys figure out what your cash flow would be and figure out a bunch of other numbers that are going to be important for you guys to know when deciding whether or not to pull trigger on an investment. So be sure to subscribe and stay tuned for that video. The second way to generate returns with real estate is through appreciation. You know how your grandma's always telling you about how she bought her first house for $35,000 in 1967? Well, that same house today could easily be worth $300,000 or more, and that's a result of appreciation. Appreciation just means that the property increases in value as time passes. This is caused by 2 main reasons. The first being inflation. Home prices are affected by inflation the same way other goods and services tend to get more expensive as the years go on. Historically, the US dollar and other currencies around the world have become less valuable as time passes. Holding on to US dollars and other nations' currencies is basically a reverse investment. Even though the balance in your bank account might stay the same if you don't spend it, the amount of stuff you can actually buy with that money is going to decrease as time goes forward. Although it's extremely important to keep enough cash for emergencies and unexpected bills, holding too large a percentage of your net worth in cash is only going to stunt your financial growth in the long term. The only exception to this would be if you're saving up for investments, but even if that's the case, there's still much better places you can keep your money than a checking or savings account at a large bank if what you're looking for is a return. The second reason properties appreciate is because of increasing demand in a given market or in the housing market as a whole. If a city becomes much more desirable and not enough homes are built in that area to keep up with the demand, then home prices in the area are going to increase. If you guys have been paying attention to the housing market in the United States over the past couple of years, then you've been watching one of the most insane periods of appreciation that the US has ever experienced. This was largely due to a severe shortage of homes in the United States, which increased demand and drove up prices as a result. The last thing I want to say about appreciation, and the part that personally gets me the most excited, has to do with the power of using loans when buying rental property in order to maximize your returns. Let me give you an example. Let's say you invest $100,000 in the stock market and your stock appreciates by 5%, leaving you with a profit of $5,000. Now I want you to imagine taking that same 100K and putting that as a 20% down payment on a property that's worth $500,000. If that property appreciates by the same 5% that the stock did, you'd actually be making 5% on $500,000 rather than 5% on $100,000 with the stock. I also just want to quickly remind you guys, this isn't financial advice. I'm doing this just purely for educational purposes, so I encourage you guys to always do your own research. So, if you end up living in a cardboard box on the side of the road as a result of what I've said, I'm super sorry to hear that, but you've been warned. The third way to make money in real estate investing is through loan paydown. This method only applies if you're using a loan on your rental property. Imagine this scenario with me. Let's say you get a 30-year mortgage on a rental property, and this property is breaking even in terms of cash flow. Let's also imagine that the property doesn't appreciate at all over the 30-year loan period. This would be highly unlikely, but bear with me for the sake of the picture that I'm trying to paint. If you put 20% down on a property and the loan on the remaining 80% gets paid off entirely by rent that you received from your tenants, then you essentially just got 80% of that property for free over that loan period. This means that if you put $50,000 down on a property that's worth $250,000, by the time the loan is completed, you'll basically have gained $200,000 in free equity. And this isn't even factoring the possibility of cash flow and appreciation. The last way people generate a return from real estate is because of its potential tax benefits. I want to tread lightly as I go over this one because I'm not a tax professional by any means, so definitely go talk to your CPA or a certified tax professional if you're inquiring about taking advantage of these tax breaks. So there's something called a 1031 exchange in real estate, which basically allows you to defer your taxes on your capital gains of a property that's been recently sold, as long as you take all those profits and roll them over into a more expensive property within a certain time frame. As far as I know, there's no way of doing the same thing with stocks. If you sold one stock and instantly put all that money into another stock, you would still have to pay capital gains tax on the profit from the initial stock. There are also certain situations where you can claim depreciation on your rental properties and use that to offset some of your cash flow that you're receiving, or maybe even under very specific circumstances, you can use that to offset your regular income. The reason so many billionaires and extremely wealthy Americans seem to be able to get away with paying little or no taxes is often due to the benefits that they receive from owning real estate. I find it funny that people always refer to the rich as using tax loopholes to avoid paying taxes. While there's definitely no shortage of wealthy people breaking the law, the majority of these people are actually using the tax code as it was written by the government to legally pay less taxes. These same legal and legitimate tax reduction strategies are available to any American who works hard enough and educates themselves on how to use these. I'm not here to say whether this is fair or right. I'm just letting you guys know that the system was purposely set up in this way. Based off the 4 means of building wealth through real estate that we've covered today, I really hope you guys are starting to understand what a powerful tool this can be when done right. It gets me excited just thinking about it. Thank you for watching, folks. Hit the like button if you got something from it, and leave a comment if you guys have any ideas for future videos or just want to give me some feedback on the content I've made so far. Thanks again, guys. I hope you all have an absolutely marvelous day.